Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get straight to the headlines. The Nifty is moving towards the 10,450 mark, led by banking and metal stocks.
Government seeks an approval for additional 80,000 crore in spending on account of bank recapitalization bonds this fiscal.
The RBI asked banks to hold off on insolvency proceedings against Jaiprakash Associates in light of a pending case in the Supreme Court.
Imported solar panels may soon attract a duty of 7.5% as the government looks to clamp down on Chinese imports. All right, we'll get to all of that in a moment, but first the markets, and Neeraj is here as always to tell us how the markets are faring today. They've managed to hold on to some early gains.
Yeah, so not bad. The broader markets too doing reasonably okay, volumes reasonably okay, so no complaints thereof. Metals is an interesting one. Despite commodities coming off on LME overnight, I think the metal names are still ruling the roost. So the likes of Tata Steel, Vedanta, Hindalco and others are still up in the green in the session today. Nifty Metal Index is about a couple of percentage points. So the rally in the commodity names is not coming off. ONGC, incidentally, because of the crude uptick or otherwise, also seems to be doing okay. And heavies like Tata's L&T have performed. The only downside to today's large cap performance is what's happening to technology. And it's a day up, a day down, quite frankly. Almost every alternate day, you see technology doing the exact reverse of what it is doing on a given day. So today it's down, yesterday it was up. I would take a punt, then maybe tomorrow it'll be up again. But let's wait and watch what happens there. I think the broader end of the spectrum was interesting. One, all those PSU names, due to various announcements, buyback or expression of interest or otherwise, are doing okay. So SJVN, Dredging Corporation, NHPC, in like of what's happening to SJVN, also has also done well. So that set of stocks are doing okay. And then at the extreme end, I think two pockets stood out. One is building material companies. So, I mean, and the whole gamut, I mean, Visakha to some of the others are all doing very well. And some of the small cap chemical companies. So Oriental Carbon and Chemicals is up about 15-16%. I saw Nosil up about 10-11%. Megmani Organics is about 10-odd%. So clutch of these chemical stroke specialty chemical names, and the smaller ones in particular seem to be doing rather well for themselves in the session today. But some in substance, broader markets activity fairly decent.
Very quickly, you're not seeing the specter of rising oil prices affecting the market sentiment so far?
Yeah, so you would have thought that 2% higher, even that would have had an impact. But no, suffice to say, the market seems to be ignoring almost all the macro headwinds that we may have right now. And this is despite the fact that the first 4 days haven't seen any large buying activity by the domestic institutional investors. It's been a net sell for the first 4 sessions. So, but for now, yeah, momentum is okay. Martin is holding on to key technical levels, so people are happy with that.
All right, Neeraj, thanks so much for that. There's a whole bunch of market news, and we will come back to that in a minute. But we'll start with a story that's been broken by the Tribune because it's an incredible story. 500 rupees in 10 minutes. That's all it may take for you to get access to millions of Aadhaar account data. That's the big takeaway from an investigative report done by the Tribune today. Rachna Khera, the reporter who's done the story, managed to gain access to all of this Aadhaar data. All she had to do was make an upfront payment through a Paytm account. That's what it seems like. But Rachna is joining us on the phone line from Jalandhar. Rachna, important story, getting a lot of due attention today. Can you also tell us in your words as to how the process worked? You had a Paytm account, from what we can understand, that you had to pay money to, and you were routed across to this data.
Yes, all we need is rupees 500, and in just 10 to 15 minutes, you can have an access to all the Aadhaar details of any of the citizens here in India. The thing, as we have mentioned in our report, that we just got in touch with one person who introduced himself as Anil Kumar, and he just asked us to provide him my name, my mobile number, and my email ID. So which I created in less than 2 minutes, and I forwarded that to him. And within 10 minutes, my gateway was active, and I got the login and the password on my email. So through that email, through that password and login, I managed to generate an access code, which was there on the UIDAI website. And in less than a minute, I got an access to the Aadhaar details of all the citizens here in India.
Okay, Rachna, what did you obviously reached out to UIDAI for their side of the story. What are they saying? Because they've been time and again pointing out that this is impossible to breach, that data is secure. This doesn't fly in the face at all. What is the UIDAI saying on this story?
See, a lot of time UIDAI has maintained that there is no breach, it cannot be possible to access the data. But the investigation which I carried out yesterday, and believe me, it was just, planned in just 3 hours. And we just managed to break the data. Not only we managed to get an access, but we managed to print the Aadhaar cards as well. And you won't believe it's just a small shop here in Jalandhar which managed, and I'm sure there are so many. As we have mentioned in our paper, these VLEs, the village level enterprises, there are over 3 lakh village level enterprises, those who are working as claimed by the CSC representatives here in Jalandhar, and majority of them have access to this data. Now, it is very simple. It is like the UIDAI which has maintained is totally false, because what I feel is that it is just very easy. Even if you can also manage, because right now they have stopped the providing this software here in Punjab, as we were told, but I'm sure in other states it must be going on.
Rachna, can you explain to me, when you reached out to the officials, etc., they are not denying that the data that you accessed is the actual data, right? They are agreeing to the fact that you did manage to get access to this database, which only a few officials should have access to.
That was the best part. Once I managed to contact the director, the deputy director, and the Punjab head, initially they were shocked. Initially they didn't believe me. I spoke to them. The director, Mr. Payne, he was in a meeting. I told him that I managed to get a gateway, a direct access to the Aadhaar card. He seems to be, just not interested. He thought it is just not possible. And he told me to speak to his Punjab team. So once Mr. Jindal, he got in touch with me, he did not believe me, and he asked me to provide him a demo on phone. So I asked him that you provide me. He spoke to me. He asked me whether I managed to get an access of the dashboard, which is there on UIDAI, and I told him. And in front of that, I managed to provide him some details. Finally, which made him believe that yes, it is a breach and definitely a major national security failure.
Shocking story. Rachna, thank you so much for your time, and thank you for joining us with those details. That's a reporter from Tribune who broke the story about how Aadhaar details are available for as measly as sum as 500 rupees, and all it took was 10 minutes of her time to get access to all those details. Let's move on now, and let's talk about as part of the mega PSU bank recapitalization plan, the government has sought the Parliament's approval to issue 80,000 crore worth of recapitalization bonds. The government wants to issue these bonds within the current financial year. Anto Anthony of Bloomberg News is here with the details. This was earlier announced. What details do we have? And it's obviously the government is obviously raising additional capital as well.
Yes, so finally some clarity is emerging on how much capital the government will be infusing in the next 2 or 3 months into the state-owned banks. So they have sought the approval for raising 80,000 crore through the recap bonds. And this comes on top of the 8,000 crore which they have budgeted in the last year's fiscal, for the current fiscal. And interestingly, we are also getting some clarity regarding what would be the interest cost that the government will be paying on it. They are paying a coupon rate of about 8% on this 80,000 crore which would be raised. So yes, good news for the banks, because finally the investors are getting some sort of clarity.
Do we know, Anto, yet whether they are going to be SLR bonds?
That is something which we are still seeking clarity on, whether it's going to be SLR bonds. But what we are picking up from the Finance Ministry officials is that the Finance Ministry wants it to be given the SLR status, but the conversations are going on between RBI and Finance Ministry regarding this.
All right, Anto, thanks so much. The bank recap, part of the planned recap, but the numbers have started to come through, and we now know what will come through in this fiscal, which is 80,000 crore via the recap bonds. Let's move on to another banking-related story. Jaiprakash Associates lenders have a little bit more time before they have to initiate insolvency proceedings against the company. The RBI has asked ICICI, which is the largest lender, to first seek clarification from the Supreme Court. Let's go across to Vishwanath Nair, who's brought us the details on this story. Vishwanath, what's going on? There seems to be some sort of back and forth on this this particular account?
Yeah, so what we understand through our sources is that Jaiprakash Associates was part of the 29 stressed accounts that the Reserve Bank of India had put in the second list, where the bankers had time till the 13th of December to resolve it outside the NCLT process, failing which they would have to take it to NCLT, simple and clean. But what happened eventually is that the Reserve Bank of India reached out has had a communication with ICICI Bank, the lead lender in this case, and told them that you hold off temporarily on any insolvency proceedings till you get some clarity from the Supreme Court whether the bankers can go ahead and invoke any insolvency. The issue is in the JP Infratech case, which is part of the first 12 insolvency cases, the Supreme Court got involved in the matter and has stayed the insolvency proceedings. Apart from that, they've also put in some kind of restrictions on the directors and the promoters of Jaiprakash Associates, which is the promoting company of JP Infratech. They've said that you cannot sell or trade in any of your assets. So till there is some clarity from the Supreme Court, the bankers cannot go ahead and invoke insolvency in JP Associates. That is what we understand from our sources.
Vishwanath, just a quick follow-up. So the reason this clarification has come now is because the deadline for the 28 accounts which are on the second list has sort of passed, and we are expecting, as you had reported a few weeks back, most of these accounts to go into insolvency?
That's right. So we had said that about 24, 25 odd accounts are likely to go into insolvency of the 28, 29. So JP Associates was one of the cases where there was some kind of resolution which was being planned outside the NCLT process. Bankers were more or less certain, but it seems and that is what our sources are telling us, that the Reserve Bank of India has sort of rejected that option, saying that the plan that you have submitted as a restructuring plan is probably not sustainable, and therefore resolving it outside the NCLT is out of question. What happens within the NCLT, that is something that the lenders will have to watch out for, depending on the Supreme Court's clarity.
Hold the thought, Vishwanath. Let's also get another side of the story. The Reserve Bank of India has put yet another lender under prompt corrective action of the PCA. Allahabad Bank is the latest in the caught in the RBI scanner. This after an on-site inspection revealed high NPAs, the non-performing assets, and negative return on assets for 2 consecutive years. But which are the other banks on that list? How do their books compare with each other? Vishwanath has put that list for us. Take us through that list, Vishwanath.
Yeah, so we have about 11 banks now, which is roughly about half of all the listed public sector banks that are there in the system. These guys are all under the prompt corrective action initiated by the Reserve Bank of India over the course of last year. Some of these go back beyond, like for example, banks like Indian Overseas Bank and UCO Bank were banks where the PCA was invoked a while back. So what this seems to suggest is that typically whenever you cross the gross NPA ratio of about 11%, that is when the Reserve Bank of India starts getting a little cautious and starts to invoke this PCA. PCA, essentially how the Reserve Bank of India defines it, is a mechanism through which you can turn around these banks and bring them back to health. That is all that the aim of the PCA is, and they have been clarifying that this does not mean that the depositors are under any kind of stress just because these banks have been under this process. Apart from the NPA number, an important number also to look at is the capital adequacy, wherein if you look at where these banks stand, apart from say a Bank of India, which is about 12.23%, most others are at sort of a danger zone. Under Basel III, the banks are supposed to maintain a certain amount of tier 1 equity so that they can remain healthy and solvent. So since a lot of these banks are at the edge, or in fact some of them are below, these raise the concerns for the Reserve Bank of India to invoke the PCA in these banks.
All right, Vishwanath, thanks so much for detailing. I think the standout part of this is that half of the government-listed banks are under the RBI's watch. Let's move away from banking. JSPL's 33,000 crore investment is finally bearing fruit. The 6 million ton per annum Angul facility is now on stream. How will the power to steel major reap its benefits, too amid rising cost pressures in the industry and deleveraging of its own balance sheet? We caught up with N.A. Ansari, CEO of the steel company. Let's hear out a slice of that conversation.
It's not only the iron ore prices, which have gone up very, very substantially, almost double in certain parts of this country, but also the coking coal prices have also been going up. So combined together, I think for most of the steel makers, this cost impact itself will be more than 2,000 rupees per ton. And going forward, I certainly expect that the prices of steel are going to go up because nobody can actually absorb all this cost. And but as far as demand of steel is concerned, last quarter, in fact, we do see some upward swing in the construction business in the country. And going forward next year, we do expect that all the initiatives which have been taken by the government are still being taken. That should start very clearly manifesting itself in higher demand for the construction grade steel. As you are aware, we are not only into construction grade, but also we manufacture the steel plates and some other products. And as far as plate demand is concerned, we find that it is remaining quite steady, and that's a fairly large business for us. And as far as construction grade demand is concerned, that's going to go up. So overall, we are quite positive that this cost impact will be actually absorbed by the market, and the steel plant should be looking for a reasonably good time as far as demand is concerned.
How much will your costs go up by on account of higher iron ore prices as well as coal prices, as you pointed out? And will you be able to pass all of it on to the steel consumer?
I would imagine that the prices will go up by about 1,800 to 2,000 rupees, depending on the route which people follow. And we do expect that these prices, since the demand is going to go up, most of it will actually be passed on to the consumers, because they won't be, the steel plants will not be able to manage otherwise. So it's something which is bound to happen.
And what's the latest update on the Angul expansion, sir, on how that will boost your financials as well?
The Angul expansion, as you know, one of the most important milestone which we wanted to come to was commissioning of BOF furnace. And I'm very happy to tell you that last month, in fact about 10 days back, we have started our BOF furnace, and the entire process is going on quite smoothly. When you start a new process like this, it takes a couple of weeks, 2-3 weeks to kind of stabilize, and we are in the process of stabilizing this. So we are very happy that we have started this. Now what is going to do is to help us in making sure that the entire complex, the integrated plant which is there already, should start working at full capacity. The blast furnace was running till recently only at about 50% capacity. Now we are in the process of ramping it up, and going forward in the next quarter, we do expect to reach almost the, let's say, 90% level of the blast furnace ramping up, blast furnace capacity. So we are, it's a very, very important time for us, and we do believe that it's something which is going to help us tremendously in the coming months and the year.
Certainly hope so. Mr. Ansari, a couple of questions. The last time that I spoke with Mr. Naveen Jindal, about 2 or 3 months, or maybe slightly longer than that ago, deleveraging was in full steam. What's the current scenario on the debt front that you can give us?
Yes, despite increasing the production level, and despite adding the new facility and so on, I'm very happy to tell you that our debt level has not gone up. At the current scenario, we are fully current, in the sense that there is absolutely zero overdue as far as payment is concerned. We have mapped our entire repayment schedule as well as the interest payment schedule, and we are quite confident that we can meet this entire thing. On top of it, in order to make the things even easier, we are still looking at, in fact, we are working on certain, let's say, assets which we can monetize. I mean, these assets are obviously the non-core assets that we are looking at, but right now I'm not really in a position to tell you that which assets and when, because that's all work in progress.
Okay, that's a view from JSPL. In a bid to take on Chinese imports, the government is considering a 7.5% tax on imported solar panels. Anindya Upadhyay of Bloomberg News joins us with the details. Anindya, what's the reason? What is the government planning to do?
So India is considering levying a 7.5% import duty on solar panels in a bizarre move, is what we hear from our sources. And right now, solar panels do not attract any duty. Now, I call it bizarre because India has the second largest solar target in the world after China. And to fulfill that, to set up these 100 gigawatts that Prime Minister Modi envisages to set up by 2022, India relies heavily on imports.
panels. And it is because of cheap Chinese imports that India has been able to produce very low, has been able to discover actually very low, solar tariffs and become one of the cheapest destinations in the world to produce solar energy. Now, a 7.5% duty which is proposed on imported solar panels is going to increase project costs. And the reason we hear for it is an extension of a 2017 tax dispute that happened at the Chennai port. Now, what happened was that in 2017, for months, the Chennai customs had withheld, containers, hundreds of containers having solar panels, and they argued that solar panels generate electricity, so they are motors, and they should attract a duty equivalent to motors, that of 7.5%. This dispute continued because the Ministry of New and Renewable Energy requested the Finance Ministry to exempt solar panels from this duty because panels are panels and motors are motors. However, we hear from sources that the Finance Ministry is actually considering a reclassification of solar panels as motors so as to make the duty applicable. Also, in 2016, there was an identical dispute, and the customs had then produced, sent a directive which is there in the public domain, which clearly said that solar modules should be exempted from duties as long as they weren't connected to a motor or an electrolyzer. However, this time around something else is happening. A duty looks likely, and right now the Finance Ministry, we hear, is considering the Renewable Energy Ministry's request to exempt solar projects already awarded, levying the duty on panels which have to be imported for future bids. So this is going to make solar projects expensive, and so will the tariffs rise. So this is what we hear from our sources. Back to you.
All right, sounds like a counterproductive move, as Anindya explained. Let's move on to a Bloomberg Quint exclusive. Maharashtra State Cooperation Department expects to find at least 7 lakh applicants ineligible for the farm loan waiver. That's nearly 10% of the total applications that came in. Purva Chitnis gives us the details of what she's picked up.
Out of the 67 lakh beneficiaries who would receive farm loan waiver in Maharashtra, the government expects around 7 lakh beneficiaries could be ineligible to receive this waiver. From our sources, what we understand is that the government has already cleared 49 lakh beneficiaries, but however, it is unclear about the remaining 20 lakh beneficiaries. So after this second round of revision, the total figure for the beneficiaries could fall somewhere around 60 lakh. Now remember, the government had announced farm loan waiver in Maharashtra for 89 lakh farmers, which amounted to 34,000 crore rupees. However, only 67 lakh farmers actually applied. We also understand that so far government has given loan waiver to around 28 lakh beneficiaries amounting to 12,000 crore, and it has already disbursed 23,000 crore for the 49 lakh beneficiaries. So after this total revision, the total farm loan waiver figure could fall anywhere around 25,000 crore or 27,000 crore.
Purva, thank you for that. Coming up next, Bajaj versus Bajaj. We compare how Rajiv and Sanjeev Bajaj have fared and to grow their business after the group split in 2008. An interesting comparison coming up next.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business News, where news for business people.
Welcome back. You're watching Power Lunch. Let's dip back into the headlines at the half hour. The Nifty is moving towards the 10,450 mark, led by banking and metal stocks.
The government seeks approval for additional 80,000 crore in spending on account of bank recapitalization bonds this fiscal.
And the RBI has asked banks to hold off on insolvency proceedings in the case of Jaiprakash Associates in light of a case pending in the Supreme Court.
All right, let's do a quick check on how the markets are faring at this point in time. Pradeep is taking a closer look at some of the stocks that are moving in the last half hour. Pradeep.
So if you look at it, the market's range has widened a bit. So now we have seen a 30 points range on Nifty instead of 20. That was there till last minute. But markets are terribly flat, so you can't really trade index. All eyes on Nifty Bank because of the weekly expiry. So now that one has started to move up, especially the PSU banking index has moved up because of the bank recap. But interestingly, what you see here is that the focus is more on the mid-cap, smaller banks, which are not of that good quality. So you have IDBI moving up in today's trade. You have UCO Bank, which is leading the trade for second day in a row. So that's a bit of a curious case, really. This is the segment where market is focusing on, not really the Bank of Baroda and PNB, although those stocks are also up in today's trade. Also, some more pockets, if you look at, metal remains strong despite the fact that aluminium has corrected for third day in a row. Even steel is down in global markets, but these stocks are somehow trying to hold on. And in fact, you'll still find some of the gainers from this segment. Also, mid-cap cement, some buying interest coming in on certain stocks like Sagar Cement from mutual funds or some HNIs. So you have Prism Cement, Sagar Cement, all these stocks doing well. Chemical is another sector which is hot today. Nosil, Sudarshan, Carborundum Universal is yet another case where it's a known fact that several big local investors have been active at this counter. The stocks is moving up in today's trade. And then you have Navkar Corporation, Aero Granite, again on the same theme. So what traders are trying to understand is, okay, let's identify a stock where mutual funds are interested, where some big HNIs are interested, and let's get into that. So all these themes are actually buzzing.
All right, Pradeep, thanks so much for that. Just briefly mentioning flashes on your screen, and we'll try and get Nikunj a little bit later to detail that. But on that bank recapitalization issue, I think a crucial question has been whether these bonds will be SLR status or not. Nikunj Ori, our correspondent in Delhi, is picking up from a government official that they may not be SLR. That will actually be a little bit negative for banks if they're not SLR, because if they are SLR, they can count them towards the SLR kitty and then use the remaining funds or the the incremental money that they get to invest in other things or to lend. Non-SLR status complicates the matter a little bit from them. But I think the final decision, Harsha, on this has to come from the RBI.
All right, let's talk about Deutsche Bank. Now, Deutsche Bank expects Nifty to touch 11,500 by end of 2018 and certain financial players to aid the rally. In its latest report, Deutsche says that stable policy rates and tightening liquidity are likely to aid high CASA for banks. Darshan Mehta is standing by with some of the highlights of the report. Darshan.
Yeah, so the 11,500 means a potential upside of 10% on the Nifty, and they're doing an equivalent of the Nifty on the Sensex, which they believe the Sensex level will be 37,000 for 2018. The other factor that they believe is they expect double-digit growth as far as earnings are concerned in FY19. Now, the key themes that they're playing on, there are 4 themes. First of all is the fact that the government policies will drive up rural demand. So rural demand is the first one. Secondly is in terms of infrastructure and affordable housing. Thirdly, they are bullish and they speak about stable policy rates that will help help performance of high CASA banks. And fourthly, digitization is the fourth theme that they are talking about. Now, a bunch of stocks that they've listed as far as their top picks on the large cap front is concerned includes everything from the capital goods from L&T, NTPC, there is HDFC Bank, SBI Life, there is IndusInd Bank, M&M, HUL, Dabur, Shree Cement, Reliance, ONGC and Bharti. So a lot of stocks among the large cap, which are the common names that they have. But among the mid caps, that's interesting. Limited names, Jubilant Foodworks is something that they're bullish on. Dalmia Bharat is something that they're bullish on. Apollo Tyres, BHEL and Gujarat State Petronet, that is GSPL, are the stocks that they are bullish on. In terms of market views, they're saying that the real interest rates are turning conducive for growth. Large cap valuations are high, but it's uncomfortably high for the mid caps. And finally, they're saying that the household preference for equities will likely continue into 2018 also.
Darshan, thank you for that. Let's talk about the PMI now. India's dominant services sector expanded in December, reversing the previous month's decline. The Nikkei India Services Purchasing Managers Index rose to 50.9 in December from 48.5 in November. Remember, a value above 50 indicates growth and value below that indicates a contraction. Manufacturing gauge had advanced to 54.7 from 52.6, pushing the composite index to 53 from 50.3, the highest since October 2016.
All right, the big economic data point will come in tomorrow with the advanced GDP numbers. But on the currency markets, the rupee snapped a 4-day winning streak and closed marginally lower against the US dollar yesterday. In trade today, though, the rupee is once again trading stronger. But what are the technicals saying about the Indian currency? Jayesh Khilnani is standing by with some interesting charts. Jayesh.
So, Ira, that's because, one of the technical indicators, the relative strength index, that is for the 14-day, that has actually slipped below the 30 mark for the dollar-rupee pair. Now, the last time that something like that happened, post that we saw that there was a rally and the rupee actually depreciated close to 1.2%. So, that's the chart that we are referring to. That's the RSI on the bottom panel. You can see that it has actually dipped below the 30 mark, which is the oversold level. So RSI gives you the oversold and overbought region, and currently the RSI has dipped below the 30 mark, and that's where in the past that I'm referring to on 1st of August it had dipped below the 30 mark, and from there you saw that prices moved higher for the which means that the rupee depreciated by about 1.2%. So something similar, and you can see that this has been a sharp fall rather for the dollar, that is, and we can see that some respite coming in for dollar. But not only technicals, there are some analyst estimates. That's the interesting part over here. If you can go to the next chart, we can see that all the Asian currencies that are available on Bloomberg and the analysts have their expectations for 2018. You can see that the Indian rupee is likely to be among the worst performing Asian currencies in 2018. Now the interesting bit is that this is the second last right now, and of course the last one is the Philippine peso. But up until yesterday, the Indian rupee was the worst performing currency as per the analyst expectations for 2018.
All right, thanks so much for that, Jayesh. Let's move into something entirely different from day-to-day affairs, and this is a comparison of how the two Bajaj brothers have done. This is Rajiv Bajaj and Sanjeev Bajaj. We're trying to see that since the breakup of the business group between the two brothers, which of the two entities has actually managed to perform better. They are entirely different businesses, so it may not be that easy to compare, but still it is worth looking at what shareholders have gained from betting against one brother versus the other. Rajiv Bajaj, of course, manages the auto business, the two-wheeler iconic business of the Bajaj group, but Sanjeev Bajaj is the one who's built the new age business with the Bajaj brand, which is Bajaj Finance and Bajaj Finserv. Let's get across to Yatin, who's done the comparative numbers. Yatin.
If you look at the Bajaj.
All right, I think we're having some trouble there. We will try and go back to it in just a minute and give you a sense of what the comparisons have looked like. But take my word for it, although Yatin will give you the details. The market cap gain in the case of Bajaj Finance and Bajaj Finserv has been far sharper than the market cap gain in the case of Bajaj Auto. All right, Yatin is ready now. Yatin, over to you.
Yeah, so if you look at the Bajaj Brothers, clearly the demerger, happened, a decade back, wherein the scheme of arrangement was that the automotive business was separated from the financial services business of the Bajaj Group. So, Feb 20th, 2008 was the date wherein the merger came into effect, post which we had, the demerger of companies happening and a separate listing happening for Bajaj Auto as well as for the financial services business of the group. Now, if you talk about Rajiv Bajaj, he controlled the automotive business of the group. Of course, he's a mechanical engineer from University of Pune, and since the last 10 years been the managing director of Bajaj Auto. And if you look at the entire tenure post the split of Bajaj Auto into 3 companies, the sales grew at a CAGR of close to 13% and profit grew at a CAGR of 30%. Of course, the key point for Bajaj Auto is that despite being the second largest two-wheeler manufacturer in the country, it's one of the most profitable automakers of the country. And since that period of FY09, we have seen a market capitalization addition of close to 86,000 crores when it comes to Bajaj Auto. But despite having a mechanical engineering degree for Sanjeev Bajaj, we have his expertise coming in for the financial services business. He's currently the managing director of Bajaj Finserv, which is interestingly the holding company for Bajaj Finance, which is into insurance as well as NBFC businesses. Now, if you look at the sales CAGR for Bajaj Finserv for FY9 to FY17 period, the sales CAGR was 68% for Bajaj Finserv and 42% for Bajaj Finance. However, the profits for Bajaj Finance grew at a much faster pace at a CAGR of close to 65% versus Bajaj Finserv, wherein the profit CAGR was close to 54%. But the most interesting part here between the two brothers is that despite starting at a similar market capitalization in 2008, the market capitalization for Bajaj Finance and Bajaj Finserv put together is almost 1,81,000 crores odds. This is based on closing prices of yesterday. However, Bajaj Auto's market capitalization is close to 95,000 crores. So, despite starting at similar market capitalization, probably the sheer growth in financial services and the premium valuation that Bajaj, Finance and Finserv command in the marketplace, the current market capitalization is almost double to that of his younger brother. So, if you compare both of these, have been significant value creators for shareholders, but probably the financial services arm of the Bajaj Group has done extremely well, at least for a period of FY08 to FY17.
Interesting comparison that. That's the comparison between the Bajaj Brothers. Yatin, thank you for that. Equitas, so is one of the first small savings bank in India and has been in the microfinance space for more than 11 years. The Chennai headquartered financial lender has seen a spike in its share, in its share of NPS in the recent past. And there have been some concerns over the rising cost of fund as the interest rate cycle is expected to bottom out. We caught up with P.N. Basudevan, Managing Director of Equitas, to understand the outlook for the company.
Pricing yields are there, it's there right there in the market. So the bulk deposits should start seeing some amount of increase in the cost, and now you will see the yield on NCD is also going up now shortly. So anyone who is exposed to the wholesale borrowing market is bound to see some increase in the cost. In our case, right now, our retail deposit does contribute a significant part of our overall mobilization. As of September, our deposit was about 40% of our total borrowings, while 60% still remains the old borrowings which we have to phase out over a period of time. Out of that 40% of deposits that we had as of September, our bulk deposit was somewhere in the range of around 22-23%. So nearly half of our deposit was bulk deposit in September. But our CASA has been growing on a month-on-month basis. We have set up 375 liability branches over the last 1 year. So our CASA and retail deposit traction has been quite good, as we speak. And so the bulk deposit should come down. That will have some benefit in terms of our cost of funds. But yes, to some extent, the fact of rising yield will have an impact on our overall cost of funds. So our cost of funds has been going down over the last few quarters, basically because we are replacing a lot of the old NBFC borrowings with the deposit borrowings. But that yield difference will slightly taper down because some of the deposits come at a higher cost. But if you look at our lending side, as I said earlier, we are lending in segments which are significantly not serviced or not served properly by other trade players. So we are generally never under pressure either in terms of our lending rates or in terms of our LTV or in terms of our credit quality. We are not really under stress, generally speaking.
So wholesale, I know, is linked, of course, to the market rates, and I'm not sure whether the short end where you borrow has moved up as much as the long end. But your CASA is coming at a higher cost as well because you're offering 6% rates, right, on savings account. Do you think at any stage you'll be able to normalize your CASA cost as well?
See, right now we are offering 6% on savings. Of course, current has no interest rates. And we will probably hold it for some more time because for us the whole challenge is how do we replace the balance 60% of the old NBFC borrowings with the deposits. And the difference is what we are looking at. The faster we ramp up our CASA and the quicker we replace the older and higher cost borrowings, the better it's on our spread perspective. So the whole challenge right now is to build a very strong traction on the retail deposits as well as CASA, and that's the time when your better rates on the savings does help a lot. So I don't think we are going to do a change in our savings interest rate in a hurry, but we'll probably look at it later when we have replaced most of the old borrowings with the CASA and the retail deposit. Maybe that's the time when we start looking at the cost further.
Right. I just wanted two quick updates on numbers. Your GNPA 5.76, is there a chance of that coming down? And two, your cost to income ratio, which went up dramatically, how will it normalize?
Yeah, so the GNPA should improve because, as I said, there was that microfinance had an impact, but that microfinance, the rest of the microfinance book has stabilized now over the last 2 quarters. So there is no more increase in GNPA that either we are seeing or anyone else is seeing on that. So that should help. And second thing, as I said, non-microfinance, the used commercial was the only one which showed a blip in July, August, which is again back to normal. So we should definitely see an improvement as far as that's concerned. And in terms of the cost to income ratio, it was around 83% in September. But if you see our cost of operation, the entire operating cost of 220 crores of second quarter was same as in the first quarter. We have reached a peak as far as our OPEX is concerned. And from here on, it's more in terms of leveraging the OPEX and the infrastructure that they have set up. So hopefully the cost to income should keep going down as we leverage the investment that's been made in the past.
Okay, that's Equitas for you. Talking about the outlook for the business. Quick check on how the markets are faring at this point in time. You have seen the Sensex and the Nifty holding on to the ground, 46 points up on the Nifty, about 0.5% on where the stock is trading at. You've seen a bunch of banking stocks that have been under pressure today. Oil and gas stocks also have been marginally under pressure, but you're seeing some tepid activity in the mid-cap space as well. We'll try and get you a market voice, Vikas Khemani of Edelweiss, on what he believes is the road ahead for the markets. He believes that geopolitical concerns he's concerned about geopolitical issues for the outlook for the market in 2018. However, he believes in the near term the market has a strong trajectory. Listen in.
I think structurally markets are looking decent. Markets are on upward trajectory. Definitely earnings are around to pick up. So, and we will see partly in this earnings season, we have quite a bit of events ahead of us. I think budget is there, so that can also kind of build some expectations. So I don't see too many reasons for a significant weakness in the market. Having said that, you can never rule out anything which can come from macros.
So any targets if you have for 2018?
I think the only thing I can say is that 2018 would be a little moderate year than 2017, but it is definitely going to be a good year. We will start seeing corporate earnings pick up in this year. We will see 15 to 16% kind of earnings growth in FY19, which essentially means you can see similar kind of return. Last year, last part of the return came out of the Nifty re-rating, a very small part, almost only I think 20-25% of the returns was from the earnings growth. This year around, I think you will see large part of the return coming from the earnings growth than the further re-rating. And I think we should expect anywhere between 15 to 20% kind of return in this year.
If with the higher cost of funds and the likelihood of yields at least staying at these levels, if not moving higher, Is that a cause of worry for what is arguably the largest weightage on the index, which is the financial space?
So as I was saying, I think the definitely this year you will start seeing a lot of micro improvement. We've been worrying about the corporate earnings. We've been worrying about capex picking up. So I think all those things will start seeing significant amount of reflection in the numbers. At the same time, I think this year we have to worry about some of the macro factors which can come both from the global as well as the local issues. We are in a situation where Fed is hiking the rate, which is and also reducing the balance sheet, and due to the U.S. tax cuts, you might see flows back to U.S. So in that sense, U.S. dollar strengthening is a reasonably good probability trade, and if that were to happen, you might see some sort of both cost and liquidity issue as far as the emerging markets are concerned, and that will definitely drive the cost up. Coming back home, I think inflation might start looking up given what's happening around the food prices and also a little bit around the oil price. So I think in my opinion, interest rate cut is ruled out. You might start building a case for a little bit of possible hike coming through, and if that were to happen, you might see some sort of markets are partly factoring in that. So you might see some sort of contained. And the reason why I say that this year may not have re-rating further. Otherwise, when earnings growth are coming about, you should see also re-rating. But because of this somewhat cautious macros, I feel re-rating. Maybe it is 20, 25, 30 or 25 to 50 basis point at max. So if that is the case, I think market, I'm sure, will absorb that and move forward.
Right, that's all the time we have on lunch. Thanks for watching.
Up next is Countdown.